Okay, good evening, everybody. Let me turn down the music here. But welcome back to Walks on Wall Street. Today was a big day. It is Wednesday, March 22nd, 2023. It is roughly 8:57 p.m. at night. Again, apologize for being late. But tonight we're going to be talking about the FOMC meeting. Okay, so the Federal Reserve, most notably Fed Chairman Jerome Powell, decided to raise interest rates by 25 basis points. So it's really no surprise for us, right? You know, consensus on the channel here between myself and everybody else in the chat, we pretty much knew that they were going to raise interest rates roughly by 25 basis points. However, there were some pretty notable investment banks and financial institutions on the street that thought quite the contrary. I think it was Nomura was actually calling for a 25 basis point rate cut. And I think Goldman Sachs was calling for a pause. So, pretty good. What I want to do before we get started here, now that I'm close to my computer, I want to copy and paste the Federal Reserve FOMC statement. So let me go ahead and do that. Also, I programmed it into the Nightbot, so if you type !FOMC into the chat, the Nightbot will drop that statement from the Federal Reserve, which reads, it says, recent indicators point to modest growth in spending and production. Job gains have picked up in recent months and are running at a robust pace. The unemployment rate has remained low. Inflation remains elevated. The U.S. banking system is sound and resilient. Recent developments are likely to result in tighter credit conditions for households and businesses and to weigh on economic activity, including hiring and inflation. The extent of these effects is uncertain at the moment. However, the committee remains highly attentive to risks of inflation. The committee seeks to achieve maximum employment and inflation at a rate of 2% over the long run. In support of these goals, the committee decided to raise the target range for the federal funds rate to a range of 4.75 of a percentage point to 5%. So there you have it. We officially now have a 5 handle on the Fed funds rate. But the bond market was more the same today. It was very, very volatile in the bond market. If you noticed, Treasury yields actually sold off a little bit. So markets, if we want to talk about the equity market, the Dow Jones Industrial Average, and the S&P 500, also the NASDAQ, the tech-heavy NASDAQ, closed at pretty much the dead low of the day. I think the S&P was down almost 2%. The NASDAQ down about 1.6%. Now, I think it's important to note that the Dow, or the Dow 30, is now trading well below the 50-day moving average and the 200-day moving average. The S&P 500 is also trading below the 50-day, but we're just at the 200-day. The only major equity index that's actually trading above both moving averages is the NASDAQ. So we're going to talk about it tonight. We're going to break it down. Let me go ahead and get my backpack squared away. We'll say hello to everybody in the chat. And tonight, I think we're going to head to the Upper West Side. We haven't been there in a minute, so I think it would be good to do that. So bear with me one second. Who do we got? Hey, Richard Vogel is here. Welcome. Christina. I see Hawaii. Jordan S. says good evening. What's up? Hey, Sparks Carnival is here. Always a pleasure to see you. Thanks for joining us here tonight. Now, another thing we are going to talk about is I don't think the Federal Reserve Chairman and, let's say, Secretary Janet Yellen are on the same page here, which I think spooked markets a little bit today. But we'll talk about that a little bit later. Did anybody see Janet Yellen's comments earlier in the day? Sort of contradicting the Fed chair. Kind of interesting. Hey, Kanar Barr is here. Welcome. Austin City Limits says don't fight the Fed. Brick Stonewall. Sparks Carnival. Well, take it easy, my friend. Hopefully you have a key to get back in. Okay, here we are. We are officially at the outside world, my friends. Here we are on Manhattan's Billionaires Row. We are overlooking the beautiful 157, which is actually the building that kicked off the entire trend here on Billionaires Row. Now, this is a residential apartment building and one of the most expensive and luxurious hotels in the city, called the Park Hyatt. If we turn the camera over to the left a little bit, you'll see Central Park Tower, which is also a product of the Extel Group as well. And then the building with the gold top is 220 Central Park South. Really, really unique, gorgeous building here. It's about 56 degrees Fahrenheit on the ground floor here in Manhattan. It was a really, really nice day. I see Fuzzy Dice here. Hey, Ryan Bex, does anybody else get car sick from watching the SPY move today during Powell's speech? I definitely did. I mean, intraday volatility was really, really crazy. Now, to Ryan's point, and real quick, guys, we're gonna head to the Upper West Side tonight. This is the Russian Tea Room, very famous spot here on 57th Street. But there was tons of volatility, but the day finished with all of the major equity indices finishing on the dead low of the day, or LOD. Now, I think the biggest contradiction for the day, but I sort of want to defend Janet Yellen here for a moment. Did anybody see the comments in relation to depositors? So Janet Yellen was doing her testimony today, and there was a bunch of questions, obviously, about different depositors at different banks, right? Should all of these depositors, not just at Silicon Valley Bank and the banks that unfortunately went under, should they be protected, but should all depositors be protected? They're using the terminology blanket protection, right? So as we know, the FDIC only insures depositors up to $250,000, $250,000. Ooh, I think she just fell in the trash. It's not good. It's really gross. Anyway, so as we know, the FDIC only insures depositors up to $250,000. And there's been a lot of calls from some pretty notable people on Wall Street to temporarily have the FDIC have a blanket insurance of all depositors. Now, I just don't think that's realistic or based in reality at all. It is my view that I think people need to take the hint of nuance here, if that makes sense. And what I mean by that is, obviously, the Federal Reserve created this backstop program alongside the Treasury on a one-off basis, right? I think anybody who's just being honest about it and understands the situation, it's obviously a one-off basis, right? But there's going to be a lot of people in Congress that are going to really, really press Janet Yellen and Fed Chair Jerome Powell to say, hey, you know, if you are backstopping depositors of Silicon Valley Bank, of Silvergate, and the other bank, the other New York-based bank that went under, does that mean all depositors are going to be taken care of and insured? Because the thought process there is, if the answer is no, right, if not everybody is going to be insured over that amount, well then why don't people who have their deposits at some smaller regional banks, why don't they just move them to a bigger bank where the quote-unquote too big to fails? Now, it's created a very sort of nasty, visceral situation here, because Janet Yellen can't come out and say, yeah, we're going to, you know, insure all depositors, it's going to be a blanket 100%, because that's just, it's just not real. It's not real. And as we've talked about, you know, this fractional reserve banking and fractional reserve lending system that we have, it's all based on trust and all based on confidence. So I kind of want to defend a little bit. You know, people were saying that Janet Yellen and Fed Chair Jerome Powell were contradicting each other, because if you guys listened to the FOMC, or I should say the speech after the FOMC announcement, Fed Chair Jerome Powell assured depositors a dozen times throughout the speech that depositors are going to be fine. We have, quote unquote, to use his words, all the tools necessary to really backstop depositors and make sure depositors feel safe, and they should feel safe, and our banking system is very safe and sound. But then on the other hand, during Janet Yellen's testimony today, she said we are in no way exploring what she's calling a blanket coverage for all depositors across all banks, which that's honestly true, right? That's real. It's impossible to insure everybody at every single bank in an indefinite amount. It's just not real. I don't know, any thoughts there? I wanted to ask you guys this because pretty much all the tweets I'm reading on Twitter, half the people are in agreement, half the people, you know, want this sort of blanket deposit coverage. Real quick, this is West 58th Street and Broadway. We are going to be headed to the Upper West Side tonight. Hey, Lexus says, yeah, I know someone who was... All right. Ratfink says, I don't think we can afford to cover every depositor. Yeah, it's just not real. Bing Bong Bob, welcome. Good to see you. Exploration says Janet Yellen is a joke. Brad's Brain says depositors either need full coverage or some transparent way to know the bank's safety. I agree with that. Now, the reason why I'm saying and sort of defending Janet Yellen here is because I think we need to live in a little bit of reality here. And the only reason why this is a problem now is because we're seeing all these bank runs, right? And everybody knows, and we've talked about this multiple times, here's the Deutsche Bank Tower here. No bank, okay, in America, zero, there's not one, could have withstood about $44 billion worth of withdrawals in less than 24 hours. It just doesn't exist. It's not going to happen. So in theory, every single bank in America is prone to a bank run in our fractional reserve banking system. Yes, it is true Silicon Valley Bank's management was extremely derelict in their duties to, provide the appropriate interest rate hedging and the like, but, we can't come up on the situation and not be honest about it and say, okay, this was a one-off base case to back the depositors of these particular banks. We can't extend that coverage to everybody because it's just not possible. But that is not going to appease the average American. That's sort of my take on it, right? And I don't think Janet Yellen or Fed Chair Jerome Powell can really come out here and say, yeah, this was a one-off base case, because then people are going to say, okay, well then you're picking and choosing losers and winners. So I'm just trying to get both sides of the story here. It's kind of interesting. All right, this building now, everybody, is the Trump International Hotel and Tower. It is located on the most northern side of Columbus Circle. Hey, Sally's here, welcome. JPJ Auto Tech says, Tom, ultimately they have to be vague because the public needs confidence in the deposits, that the deposits are safe, correct. But the officials cannot say straight that everybody is insured. Yeah, I mean, that's the rock and the hard place that we are up against. I agree with you 100%. Again, it's all about perception. It's all about the perceived notion that banks are strong, depositors are safe. So it's just going to be a lot of, showboating, for lack of a better term. But here's the Deutsche Bank towers. Hey, Lorraine is here. Says, we are living in very scary times. The known and the unknown is very unsettling. I would agree. Ryan Beck says, I think the market digests overnight and tomorrow morning, but I think we rally into Friday. It's definitely possible. Now, yesterday we were talking about how usually the first move after a big Fed announcement, right? So a material change in monetary policy, they say the first move is the wrong move. So we'll see. I mean, we'll definitely have to see. Now, I think we could all agree, and even the Fed chair said this. Oh, look at that dog. That thing is huge. It's almost like a bear. Hey, photos from around New York is here. Good to see you. Brad's Brain says, we can't say we don't want regulations and we want full coverage, one or the other. That's true. Now, one of the things that the Fed chair did say today is he did reassure that the banking system is safe, and he's sort of talking out of two sides of his mouth to provide some nuance here, right? So he's just, without saying it, he said the banking system is fine and depositors shouldn't be worried about their deposits at the banks because we have tools, right, to use his term, tools, in case anything happens, we could backstop it. Which essentially he's saying, right, if he didn't have to use, political terminology to dance around, he's like, look, you guys are fine. If a bank run happens, we're gonna backstop it and bail you out, right? Because you have to understand, the Federal Reserve creates an unlimited amount of money. There's no limit to the amount of money the Fed can create. So in essence, that's how a fractional reserve lending and banking system could sustain its continuous acquisition and expansion of currency and debt in perpetuity forever. But you can't go out and say that as the Fed chair. I mean, but yeah, in layman's terms, he's like, look, if a bank goes under, we got you. We're going to take care of you. So everybody chill out. You don't have to rip your money out of banks. That's essentially what he's saying. At least that's how I interpreted it. So this is West 60th Street. What I think we're going to do, guys, is walk all the way up to Lincoln Center. And maybe we'll do a quick lap around Lincoln Center. Rat thinks that someday the bill needs to be paid. Agreed. Somebody says, dumb question, but what stops companies from splitting deposits along many banks with max of 250K? Yeah, I don't think it's a stupid question at all. I think you just have to realize scale, right? And I think scale is very important to discuss when talking about this problem. Because a lot of people were like, well, what idiot would leave more than $250,000 in a bank account. Well, there's some very, very wealthy people on this planet, and let's say if you're worth, 100 million, what are you going to have? Thousands of bank accounts? It's just not real, right? And like think about a major company, right? Like Apple. Apple has in some cases more cash than the vast majority of companies in the S&P 500, right? Just cash on the balance sheet. You can't really have thousands and thousands of bank accounts. I think that's the point, right? Now, there is sweeping activity that goes on, right? In certain cases, they're called sweeps, where if you have like $1 million account balance at, let's say, a broker dealer or something like that, overnight they'll sweep the money between different accounts so you technically have more insurance than just the regular $250,000 limit. Hey, Travel Nista, good to see you. Welcome. Yeah, Hawaii is plus it's harder for businesses to manage multiple accounts, multiple financial institutions. Agreed. Brad's Brains, as I mentioned before, I know of an NFL owner who had $100,000 in multiple bank accounts. When FDIC coverage was $100,000, I thought he was crazy then. Wow. Yeah, he must have had many multiple bank accounts. Hey, Paul is here. Says, hey, Tom, what is your personal confidence in the bank security now? Do you think people should feel assured that their money is safe? Well, I mean, here's what I feel, right? And what I feel doesn't necessarily mean I'm right. Again, knowing that we live in the system that we live, right? And also, bank failures to a smaller scale, they happen a lot, right? They happen all the time. So, do I believe in the cockroach theory that we're going to see more pressure put on a lot of other financial institutions and they could potentially go under and be absorbed by other larger institutions? I think we're probably going to see more of that, especially as rates continue to go up, right? Today they raised the Fed funds rate by 25 basis points. So now we're at 4.75 of a percentage point to 5%, right? That's going to continue to put real big pressure on some institutions, and it's going to cause things to break. Now, would I be petrified about, if I have, a business bank account with JP Morgan Chase or something like that, and I have a little bit over $250,000 in there? I mean, for me, I that's something I really just can't worry about. If JP Morgan Chase goes down or Bank of America goes down, I mean, the world is going to be in a world of hurt, right? So, I don't know, if you think about it at face value, ripping your money around and panicking is essentially what's creating the problem, is it not? Right, that is technically what a bank run is. Everybody's panicking and freaking out and ripping their money out of the banks, moving their money around to other banks that they think are going to be fine. And that's what the Fed chair and Treasury Secretary Janet Yellen is trying to tell people to chill out for now. So I don't know, I'm not moving any of my money around. My money is, I haven't moved anything, everything is there. And look, I mean, that's the system we live in. It's a system of risk. Nothing is 100% guarantee. But if I had to make a prediction, I believe in the cockroach theory, right? You're going to see multiple bank failures. I think you're going to see more consolidation, right, into some of the larger banks, similar to what we saw with Credit Suisse, right? Credit Suisse was now absorbed or bought by UBS, and then you have these huge, big monopolies, and I think that trend is going to continue, in my view. I don't know, what do you guys think? Do you think that we're going to continue to see more failures now that rates are going to stay higher for longer? All right, real quick, we have now made it to one of my favorite places in all of New York City, guys. This is Lincoln Center, and there actually looks like there's a show going on right now, maybe like a ballet. Really beautiful neighborhood here. Hey, 45. It says, what is the downside of consolidation? Well, I mean, if you're a free markets person, the definition, what really makes things good for consumers, right? Think about what's really good for consumers. Competition is very good for consumers, right? If you think about all of the greatest innovations of our lifetime, like the iPhone and many other things, it was brought about by fierce competition, right? Did anybody watch those old interviews when they were interviewing the CEO of BlackBerry when he was laughing at the iPhone? He's like, you know, how could you mass market a business smartphone without a keyboard? Nobody's going to use that, you know, and that competition drives better products and services for consumers. So the thought there is that if there's only one big monopoly or just a handful of banks, there's really going to be no competition to service customers in an appropriate way. So yeah, I mean, I do think that having these regional banks be healthy and having multiple banking options for consumers is good. So the fear is that if you continue to have this big consolidation towards the top, consumers only have a couple options. Now that may be good or that may be bad. I think, in my opinion, right, my opinion isn't always the right opinion, I think it's bad. Hey, Silversmith says, walks from Wall Street, JP Morgan thought they were shorting nickel in their vaults, or storing nickel in their vaults. Yeah, I saw that. And it turned out to be rocks. How hilarious is that? It's ridiculous. Hey, Action Kid, good to see you. Welcome. Thanks for being here. AK is our good pal down in Miami. I'm going to be down there next week. I got to fly back. I have to, I don't know if I told you, I got to let in an inspector in my house. I'm redoing the insurance. So Citizens sent an inspector out. And obviously I wasn't there, so I have to come back on April 1st. I have to let him in. My premium's probably going to go up like ridiculously. Hey, the Blues Writer says the dollar is in the greatest jeopardy than ever in my lifetime because the Fed has decided to increase the money supply at will. Yeah, well, I mean, we've seen an interesting thing happen though, right? And the dollar has actually been relatively quite strong. Now, if you look at the action in the Dixie today, I think the Dixie is what, 103? Maybe for a brief time today it traded down to 102, but I think the Dixie's trading at 103. My concern is that it's broken well below the 200-day and 50-day moving average. And, you know, could we go lower? Yeah. But I think the world is always going to have a pretty strong demand for dollars. But we'll see. Look at how beautiful Lincoln Center is. I think there's some sort of a ballet going on here. Now, I want to read an excerpt from Fed Chair Jerome Powell's speech today that I think was the most important. And Fed Chair Jerome Powell said, "We are committed to restoring price stability, and all evidence says that the public has confidence that we will do what it takes to bring inflation down to our 2% target. It is important that we sustain confidence in our actions and in our words." And I actually could not have agreed more with the Fed chair. And the reason for that, I'll give you guys one more look at Lincoln Center here, really beautiful. The reason I say that is because just 2 weeks ago, before this massive banking debacle, right, this huge blow up that happened, the Fed chair was testifying and he signaled to the market that rates are going to need to go a lot higher for a lot longer. And just because a bank blew up, if you renege on that promise, the market's going to lose all credibility in you, right? And we talked about this at length over the past week, right? There was many banks, including Nomura, which thought there was going to be a 25 basis point cut today, and Goldman Sachs, which thought that the Fed was going to pause today. You know, I think it's important that if the Fed says, look, unemployment's at an all-time low, Inflation is running way too hot for way too long for our liking. And due to that data, we need to increase rates at a faster pace and hold them there for longer. If that was the messaging 2 weeks ago, and then you do a total 180 and renege on that promise, well, you just look like a big jerk. And so I think this was the right call today by the Fed chair and the other Fed presidents in the committee that vote whether they should raise rates, cut rates, or pause. I think this was actually the right decision for them today. Trying to restore the little shreds of credibility that the Fed has left, I think is paramount, again, for a functioning system that we live in terms of fractional reserve banking, right? If you want to stop the bank runs, if you want to have people chill out, you got to assure the American people that, things are going to be at least somewhat under control. So I think today's Fed policy was the right thing to do. In my view, again, a lot of people disagree, but I think so. Hey, NBA Elias says, hey Tom, I hope you had a good day. Likewise, my friend, I had a very good day, very volatile day in the markets. Now, all three major equity indices closed on the dead low of the day. But I think more importantly, everybody, than the stock market was the action in the bond market today. And it's interesting because yields actually went lower for the vast majority of the day. I think in after hours trading, the 10-year yield, the 1 year, pretty much the entire yield curve is trying to make a little bit of a rebound. But if you look at the 10-year today, I think it closed at 3.475%. The 2-year is at 3.969%, and the 1 year is now at 4.497%. And we were just talking about how the 1 year Treasury just last week was at 5.25%. So that really gives a pretty good perspective of just how crazy volatile this bond market is. Also, the 30-year fixed rate mortgage went a little bit lower today. I think it declined by a few basis points. Yesterday, the average 30-year fixed was 6.75%. Now it's 6.7%, so we have some pressure relief there. Hey, Two Wheel Freedom says, Tom, if you have that kind of money to buy real estate, I wouldn't leave $1 million in the bank with their sketchy bets. Yeah, well, I mean, I think a lot of people are thinking about that now, but at the end of the day, there's going to be risk with everything. But look, I get it. I think you're making a fair point, but I just try to keep a level head and say, look, I'm going to try to diversify my assets around as best as possible. But there's something that I like to say that's called diminishing returns. And there's also diminishing mental capital, right? I want to try to preserve my mental capital as much as possible. And I just can't sit around and be paralyzed, worrying about, a bank collapse. If I have more than $250,000, in my account, right? And some very big notable players on the street made that sort of same argument. And I agree, right? It's if a business owner or, small entrepreneurs or startup founders that, just raised their Series A and they deposit it in a bank account and, they use that money to pay their employees, they can't psychoanalyze it and just worry and, flip out and say, oh my God, is the bank going to collapse tomorrow? That's not a functioning society, right? Bad things happen, one-off crazy things happen. And it is still of my opinion that the vast majority of the reason why this happened is because you're trying to taper. Let me avoid this guy here. He's yelling at somebody. Let me cross the street. Try to avoid all the derelicts. But anyway, what I was saying is, if you have 14 years of QE, right, in ZIRP, literally 14 years, the vast majority of my life has been in quantitative easing and ZIRP, if you try to undo that, right, now it's literally been 500 basis point increase. This is where they do the eyewitness news. You're going to break something, right? If you increase interest rates to the tune of 500 basis points in less than 2 years, something is going to smash, something is going to break. This happens every single cycle. So I don't know, in my view, I'm going to try to not to think about it too much, but that doesn't mean I'm going to walk around oblivious. I've diversified the accounts as much as I can, but everything else, that's out of my hands. I don't know, that's just the way I think about it. Yeah, Lorraine says, that's right, Tom. We can't worry too much, things that are out of our control. Yeah, I mean, and I think that's what makes America great. If people want to come here to start businesses and build businesses because they could focus 100% of their time, efforts, and resources on building the business and making a great company, right? If you think about some other parts of the world, you know, those are really big problems, right? Some parts of the world you have 100% inflation, over 100% inflation, right? It's very hard to start businesses there in those parts of the world, right? Some countries don't really have established banking systems. So the point I'm trying to make is, if you don't have trust in your banking system in the country that you reside, it's going to be very hard to foster innovation. You know, startup founders and entrepreneurs should be focused on their business. They shouldn't focus on, you know, the health of the bank's balance sheet, right? They should know enough to not be, you know, oblivious to it, right? And diversify as best as possible. But anything past that, I think really has a diminishing return value, in my view. But all right, everybody, we are officially on the Upper West Side of Manhattan. This is Columbus Avenue. Take a look at how gorgeous some of these original brownstone buildings are. Hey, Action Kids, it's Tom. Fidelity Cash Management Account has FDIC insurance sweeps for $5 million in FDIC insurance. Yeah, so many broker dealers and things like that will sweep your money. So technically you can get, you know, more than that amount in the insurance. But again, like, imagine if, you know, a Fidelity goes under or something like that. You know, you're going to have a lot bigger problems to worry about than just your $5 million. I mean, that's going to be Armageddon. Hey, Dan Zhang says, Tom, what do you think about today's market reaction after the FOMC? E-mini futures managed to hit an intraday high, but then dropped more than 100 points. Yeah, I mean, everything was pretty much well off the highs and closed at the dead low of the day, right? Now, the old saying is that the first move is the wrong move. Now, does that mean we're going to rally all day tomorrow and all day Friday? I don't know. But it is of my opinion, if you look at the market just face value on a valuation basis, the market is pretty expensive here, right? Now, the market doesn't have to go lower just because I want it to. I want to make that clear, but you know, if you look at earnings season that just rolled through, I believe we're going through and will continue to go some sort of through an earnings recession, right? You're seeing profit margins across the board in many of these major companies start to erode, right? So you're having margin compression across the board. You know, the market is pricing in that the Fed is done raising rates, which is, I don't think, is the appropriate response. And did anybody see Fed Chair Jerome Powell's direct response to that? He said, I think I actually wrote it down here because it was so important. Yeah, this is what Powell said exactly, word for word. And if you want to, you know, read through the press release, if you type FOMC in the chat, you'll be able to read right along with me, and you could see the FOMC's press release. So Fed Chair Jerome Powell said the market is getting it wrong if it expects cuts this year. That's what he said. So he said, look, if the market is pricing in rate cuts this year, you're getting it wrong. He told us today that if you're expecting the Federal Reserve or us to cut interest rates before the end of the year, It's not happening, pal. He literally telegraphed that to us today. He told us. So, you know, the thought process that I have there is, okay, if rates are even going higher than where they are right now, the Fed funds rate's at 5% right now. So if they're going higher, that's going to put much, much more pressure on profit margins. I think there's going to be more layoffs. And I think we're going to go through a little bit more of the bear market. Now, I want to give you guys a very good resource here, and to sort of piggyback off of Dan's question. If you go to my Twitter profile, at Walks Wall Street, I retweeted a really, really interesting chart that was posted by a fund manager of a quantitative hedge fund. And he made a chart explaining the duration of all previous bear markets we've ever had in the United States. And I think the average bear market or so is right around, 19 months? Something like that, 19 to 20 months. If you look at the tweet, let me know what the exact data point was and put it in the chat, because I want to have a quick refresher here. But according to that chart, if we could use history as a guide, we're probably about 60 to 65% through, 65% of the way through this bear market. So I think if we stick in there, right, really, really pay attention, I think over the next 24 months, there's going to be an unreal opportunity here, like unreal. But I don't know, what do you think? Dan, what do you think? You think this market's going lower? I don't know. Let me read this comment here. Let me turn my brightness up a little bit. We're going to see the Dakota right up here. Macias says, but also maybe the market is pricing in the end of rate hikes, not so much rate cuts. In other words, maybe the market is implying we are seeing the last bit of the cutting. Maybe, perhaps. Perhaps. MBA Elias says, Tom, small to mid-sized banks hold 70% of commercial real estate loans. The market for commercial mortgage-backed securities is a mess. More interest rate hikes will not help. That is the comment of the night. I'm going to award the comment of the night to MBA Elias. Here, let me stand back. Everybody, check this out. This is the Dakota Apartments right here. But I think it's appropriate that we pay very close attention to the comment that MBA Elias just posted. And over the last few weeks, one of my biggest, I would say, predictions that I've been saying is that I think you're going to see a huge mispricing coming up very soon in the commercial real estate space. Now, why do I say that? I'll sort of explain my position again. Over the course of, I would say coming out of the pandemic, right? So post-pandemic stimulus, both from a monetary perspective and a fiscal perspective, there was a lot of big players in the market that purchased commercial real estate on floating rate debt, right? And we talk about one of the things that really didn't help in the 2008 financial crisis was in the residential real estate business, right? So you're talking about your 1 to 4 unit residential homes, right? Maybe a single family home, duplex, triplex, fourplex, that would be considered residential. Well, there was a big gross exposure to ARMs, or adjustable rate mortgages, right? So as interest rates went up, people's monthly payments went up and they couldn't afford to pay them, thus defaulting on those debt obligations, leading to foreclosure. I think you're going to see the same thing as these rates adjust in the commercial space. So I think one of the man, the wind is crazy. I'm trying to shield the microphone from the wind for you guys, but this is the main entrance to the Dakota. You see the original oil lamps. They're really, really beautiful. But I think we're going to start to see some rumblings in the commercial real estate market. and that could potentially result in some mispricing that we could take advantage of. But yeah, as MBA Elias said, as interest rates go up, right, the value of those bonds, those mortgage-backed securities, go down. And if they're forced to sell those, well, that is not a good time, as Silicon Valley Bank sort of exposed to everybody. Hey, Hawaii is here. 3T3 says, Tom, the commercial real estate market is a time between MB waiting to happen, or a time bomb between waiting to happen, maybe? Brad's Brain says, I like the tweet. Your comment basically, hang in there. I think, yeah, the turn is coming. Correct. Yep, read a great article about how we are in the end stages of the bear market. Yeah, I mean, if you look at the time frame, right, of typical bear markets, and you project that on the one that we're currently in, it would infer that we're about 65% of the way through, maybe even more. So we'll see. Now, here's what I really, really love about the Upper West Side, everybody. This is 72nd Street, Central Park West. Take a look at the gorgeous view of Midtown Manhattan. You're actually overlooking Billionaires Row. Now, would you guys agree that this shot right here looks like something out of a Batman movie? This literally looks like Gotham City here. Now, notice the very top of Central Park Tower is literally in the clouds. So, assuming you're in the market for a $250 million penthouse, and you purchase said penthouse in Central Park Tower, well, right now you would literally be living in the clouds, which is pretty interesting. Hey, Roy, what's up, dude? Roy, how is San Francisco, man? Always good to hear from you. Thank you for popping in the chat. Blues Writer, welcome. Username says, do you walk in Greenwich Village often? It's my favorite neighborhood in the city. Yeah, we were there a couple days ago. Greenwich Village is beautiful. We don't get down there as much as I'd like, but we were down there a couple times, I think, over the weekend. Maybe we'll go back there this weekend. Western Mass Dave says, ghostly. Yes, very. Now, this is one of the main entrances to Central Park. It's one of my favorites. Now here, this is a pretty good shot of 432 Park Avenue, which is another very, very notable building on Manhattan's Billionaires Row. I'll give you guys a moment to take in the beautiful scenery in and around Central Park. Now, right in front of us is Strawberry Fields. And here is a view of the Dakota once more. Now, since we're here, I think I'll quickly show you guys Strawberry Fields. A lot of people like to see it. I think this is Mark Davis's favorite place in the city. And then after I show you guys that, we'll talk a little bit about the action in gold and precious metals today. If you want to talk about volatility, it wasn't only exclusive to the equity market. Precious metals were all over the place today too. Pretty much every single asset class was all over the place. But now we are entering into the beautiful Strawberry Fields. Very, very famous place. Now during the day, if you come here, you'll see a lot of musicians playing music in tribute to the Beatles. Very peaceful part of Central Park. If you want to come here yourself, it is 72nd Street on the corner of Central Park West. And this is the famous Imagine sort of insignia here. Wow, someone says today is the 60th anniversary of the Beatles album. I did not know that. Very cool. Mighty Mole, thanks for being here. Hey, Cyber Surfers here says I don't know much about money talk, but love the shots in New York. Hey, thank you so much. Thank you for being here, by the way. We'll go a little bit further down the path here, so I could show you guys more of the Billionaires Row buildings from the park. Here you have 220 Central Park South and Central Park Tower. Hey, Dan McLaren says, hey Tom, I heard the market tends to look ahead by 6 months, so maybe that's why they don't seem to care too much of the potential crazy bear market. Yeah, so the markets are forward looking, that's right. That is true. The market in and of itself is a discounting mechanism, you're correct. Look at that, that is a gorgeous view. Now, looking at this building, everybody, you would think, oh, it's a pretty tall building, right? 432 Park Avenue. But the building's actually much taller. It's just a very cloudy day. So the top section of the building, there's actually about this much more on top of that. But it's just so cloudy that you physically can't even see it. Kind of wild. Yeah, J9's is another great sky tonight. It really is. It was a gorgeous day in Manhattan today. And it is officially spring. Thank God we made it, my friends. We officially made it to spring. Now I'll take you guys down the path a little bit and then we'll exit the park. Here's another pretty good shot. From here you can see 1 Central Park, or I should say 157. Hopefully as the spring and summer go on, it'll be a little bit lighter out so I can show you guys the reservoir. Because the reservoir at sunset is really unbelievable. It's definitely a sight worth beholding. I know, Deese is 70 degrees tomorrow. Is it really going to be 70 degrees tomorrow? My God, thank God. I thought it was going to be in the 60s. It's not too bad out tonight. As we're going into the park, it's getting a little bit colder though. This is the main bike path. I used to skateboard. If you guys look at my channel and you go to the videos section, not the live streams, and you go all the way back like a year or two ago, I have skateboarding videos all around this reservoir here. This goes all the way around the park. This is a really, really nice area here. Very quiet. But I'll take you guys back out because I think it's going to be too dark for you guys to see here. Hey, Kevin D, welcome. Lorraine says, precious metals, gold, silver, all over the place. What's your opinion? Oh, look, the flowers are finally starting to bloom. You guys see that? Very nice. Well, gold, I think, is back over 1900 again. I think we closed the day at $19.70 an ounce. So $1,907 an ounce for gold. Now, if you go to tradingview.com or you pull up your Bloomberg terminal or really whatever you use for charting, if you throw a 50-day moving average on gold, we got pretty extended over the 50-day. Now, usually once a particular stock or security, precious metal, whatever, futures, get extended more than 12% over the 50-day, you usually have some sort of a pullback and correction. And I think that's what we've seen across the board. You know, not only in physical gold, but in digital gold as well, as we talk about Bitcoin. Bitcoin sold off, I think, maybe 5 or 6% today. I think it's well off the lows. Obviously, it trades 24/7, 365. Here, I'll show you the Imagine sign one more time. Again, in Strawberry Fields. But my thought on gold remains the same. I don't own any right now. However, if we break into new all-time high territory, I will get involved in that. And we're not too far off, right? I think once we crack the little last part of overhead supply we have, and we break back into the 2000, I think 70 was the all-time high on gold. I think it could potentially be off to the races here. And the fundamental story lines up with that thesis, right? You know, we're seeing more bank failures. A lot of market participants are very, very skittish here. So I think people are looking to diversify not only their money into multiple bank accounts, but into multiple different asset classes too, right? That have a history of maintaining their value like gold does. So Golden City says 2083 is the all-time high. Yeah, I mean, if you think about that, it's sort of like all the stars are aligning, right? All right, one more shot of Billionaires Row, and then we'll head back into the Upper West Side. Hold on one second. Hey, sunshine after rain, good to see you. Here's the original oil lamps. On the Dakota, really beautiful. Let's head back in. Now, so we know that the Federal Reserve raised rates by 25 basis points today, right? That takes the Fed funds rate to 4.75 to 5%. And we just got a very interesting piece of data yesterday that we talked about at length, which was the National Association of Realtors, their existing home sales. And existing home sales are starting to go back up again. Now, I'm not saying this is a bottom, right? I think prices still have a little bit further to fall, but I wouldn't be surprised if we see transaction volume pick up a little bit, but sellers sort of come to terms with reality, right? Comes to grips with reality that, you know, you're not going to get $100,000 over asking price and all these crazy bidding wars anymore, right? I think time sort of cures all of that irrational exuberance, if you will, right? So if you see your home sitting on the market longer than normal, well, generally speaking, if your home doesn't sell, that probably means it's priced too high. And with this messaging today from the Federal Reserve, Fed Chair Jerome Powell, you know, a couple notable things that he said was, and I quote, "The market is getting it wrong if it expects cuts this year." Another thing he said is that, you know, the Fed will hike further if needed in order to fight inflation. So I don't think it's out of the cards to see a 6% Fed funds rate. And in turn, I also think that you could potentially see 30-year fixed rate mortgage maybe go to 8%. So I think that could put additional pressure on the housing market. I think this is going to create, we sort of talked about commercial real estate for a little bit. I think this is going to create some mispricings in the market, but I also want to sort of explain the other side of that theory for a moment. Now, if you look at the data, and we're crossing now back over Columbus Avenue. If you look on the other side of the street, that's actually one of the best coffee shops in Manhattan. But for whatever reason, once we cross over the street, there's a big dead zone there. There's no internet, so I can't show you guys. But it's called Black Press Coffee if you walk directly over there. But Hold on, let's cross while we have the light. Now, if you look at the data, there's a record amount of cash on the sidelines, a record amount. So I think once you start to see prices normalize here in the housing market, in both residential and commercial, I think you're going to see a lot of buyers step in because there's record amounts of cash on the sidelines. However, it is in my view that record amount of cash is consolidated into, I should say, the upper echelons of the socioeconomic ladder, right? You've been seeing this big divide between the upper class, the middle class, and the lower class, and I think that was exacerbated by, oh, look at all these Doge dogs, Shiba Inus. That's so cool. I think that was really exacerbated by, 14 years of artificially low interest rates driving the prices of assets up. And based upon that situation, if you think about who in the United States owns the majority of the assets, it's wealthy people, it's rich people. So the rich got increasingly richer, the poor got increasingly poorer, and you have record amounts of cash on the sidelines. So in any downturn, there's huge opportunity to jump, as I like to use the saying, to jump up the rings or the rungs of the socioeconomic ladder. I think it's going to happen again, but in a bigger way, actually. And unfortunately, what I predict, I'm not saying I'm right, but this is just one of my thought processes here. I think you're going to continue to see real assets, right? So real estate, like you see on the streets of Manhattan here, you're going to see them being bought up and bid up again by the same few players. And it doesn't necessarily mean all of us have no shot of moving up that rung, but I think you got to play it a little bit smarter. So I think as prices come down, there's record amounts of cash on the sidelines, but I think we need to pay very, very close attention to who that cash belongs to, right? And I think that concentration is very high up on the socioeconomic ladder. I mean, thoughts there? I want to get everybody else's take, because there's a lot of people on both sides predicting it's just going to be a massive washout and valuations are going to go down by 60%, just like they did in the 2008 financial crisis. I don't think so. I think there's going to be a correction in terms of price, nationally, by the way. But I think a lot of that is going to be insulated by record amounts of cash on the sidelines. This is the 72nd Street train station, by the way. You can get the 1, 2, and 3 trains. So this also goes express right here. Hey, Steph UH, good to see you. Bing says, I read an article that the life expectancy in the United States actually goes up in a recession. Can you explain that? I cannot explain that. I actually thought it was the opposite. I think there's some statistic out there that for every 1 percentage point increase in unemployment, a certain amount of people die. I think I heard that somewhere, but I'm unfamiliar with that. If you have the article, please feel free to share it in the chat. I think we'd all like to read that and benefit from it, if you may. Hey, Julia M says, my wealthy cousins all have liquidity and are ready to move out of a moment's notice. Yeah, I think there's a lot of people on the sidelines waiting to cash out, to pounce on some pretty good deals. MBA Elias, Tom, as long as unemployment remains strong, it's tough to see a washout of this economy, even with higher interest rates. Now, MBA Elias, I'll give you guys a quick peek inside. We won't walk in there, but for all of those people who don't really know what the inside of a New York City subway station looks like, that's what it looks like. This is the Trader Joe's over here, but we're going to head back down. MBA Elias, I'm not sure if you were on the stream yesterday, but we were talking about a potential lag in the calculation of the unemployment rate. And what I mean by that is this. We've been seeing, specifically as it relates to the technology sector, by the way, we've been seeing a huge concentration of layoffs at the big FANG names, right? So FANG is an acronym for, Facebook, Google, Netflix, and the like. So we've been seeing a pretty large concentration of layoffs there. But the vast majority of those employees get severance for about 6 months. So it's coming up on 6 months since those employees have been laid off. And yes, it's true that some of them have already been reabsorbed in the workforce, but once that severance is over, aren't they now counted in the unemployment rate? I think that was the conversation we were having yesterday. Some people said yes, some people said no, but I think we could potentially, or are seeing a potential lag in unemployment. And the Fed wants to see unemployment go higher. Nina, this is Tom. Southern California unemployment is at the highest. It's reality. Interesting. Hey, Adrian Palmels is here. Says, hey, Tom and team. Good to see you, Adrian. Thank you for joining us tonight. So I want to show everybody this building on the corner of 71st Street. Look at the amazing architecture on this building right here. Talk about a huge contrast between the likes of Billionaires Row buildings like Central Park Tower and the like. I think the city needs to do everything they can to preserve the integrity of this pre-war architecture, in my view. I think that's one of the best things about New York City, right, is the diversity in architecture. Hey, Paul says we have buildings very similar in Providence. Peter. Very nice. Now look at this. This is a new development here on the Upper West Side. Almost looks like it doesn't even fit in with the surroundings. Hey, NBA Elias says, yes, I think they are counted in the unemployment rate, but tech is only a small part of the layoff picture. Unlike 2008, there's still a lot of stimulus money circulating in the economy. It's a good point. All right, let's cross here. So this is now back on Broadway. And if we take Broadway all the way down, we'll hit into the New York Institute of Technology, or NYIT. It's a pretty good school, but you really don't even notice it as you're walking down. I'll try to point it out to you guys. You know, it's funny, a lot of the colleges here in Manhattan, we don't really have campuses here, right? So I went to college very close by, 59th Street and 10th Avenue. At John Jay, but you would never really know that you're walking past the college, right? It's not like in other parts of the country or even other parts of the state where you drive up to the campus, there's multiple buildings, we're pretty much just in a big skyscraper. So going to college in New York, especially at a local CUNY school, is it's not like the actual college experience. You go to college, you go to work, you go home, right? You go to class, you go to work, you go home. There's really no campus. It's just you walk into the building, you click the button on the elevator that goes up to your classroom, and it's really about it. Hey, Mark Davis, what's up, dude? Says, hey, Tom, hope all is well. You're on the Upper West Side tonight. Hello from Toronto. Mark, if you rewind the stream just a couple minutes ago, we paid a visit to your favorite place. We were at the Dakota, and then we went to Strawberry Fields. Hopefully you'll be able to come back to New York maybe this summer, man. Good to see you. Wind is picking up. I'm not sure if you guys could hear that, but really brutal wind picking up. And I think I feel a little bit of rain. I didn't know it was supposed to rain today. But Mark Davis, good to see you. Oh, before I forget, everybody, we gotta talk about crude oil, okay? So crude oil, I think, it's back at $70, but I think this is really important. Type in ticker symbol CL, right? If you have TradingView.com, Bloomberg, whatever, right? Look at the light crude futures contract and put a 50-day moving average on there. Now, we've broken down significantly. To give you guys an idea of the massive move we've had in crude oil, in March of 2022, okay, so this time last year, crude oil topped right about $130, roughly. Oh wow, it's 52 degrees. It actually, we were trading at like 68 bucks. Now, we had this big waterfall sell-off, obviously because of the Silicon Valley banking collapse and the like. And that caused price action to trade about 17% below the 50. So usually whenever you have those big moves and you have extension either to the upside or the downside of over 10%, you usually have these very, very ferocious neck-snapping rallies back to a major moving average, which is usually the 50-day. So I think we'll probably see maybe a little bit of a rally back to the 50-day, but I don't think this is a new bull market in crude oil. Now, my take is that the market is pricing in a recession. Okay, if crude oil is selling off, naturally what that would mean is, okay, if we go into a recession, if unemployment spikes, well, people are not going to be driving around, right? People are not going to be traveling. People are not going to be spending money in the economy. Thus, there's going to be less demand for crude oil. Now, the market, again, is a discounting mechanism. It usually looks out about 6 months. So maybe that's coming, but I could tell you guys with direct certainty, and you guys could probably attest this and would agree. I mean, you guys are watching the stream. Whenever we walk around, Midtown Manhattan, whenever we walk around Miami, Florida, the restaurants are packed, the bars are packed, people are out. We were just at Lincoln Center. It's what, Wednesday? Middle of the week, Lincoln Center was packed. People are out at shows doing things. So, I don't know, maybe a recession is on the precipice here, and we could use crude oil as a proxy or predictive measure for that. I don't know, thoughts there? Or do we think we're going to see a little bit of a rebound in crude? Hey, Andrew Calhoun, what is up? Long time no see. Our good Australian buddy is joining us. Thank you for being here. Hope all is well in your neck of the woods, by the way. Hope everything is well in the economy there in Australia. This is another famous hotel, Hotel Empire. The O looks to be out of battery, out of commission. Mike MTL says, Tom, would you buy another property in Florida? Yes, I would buy multiple. Now, would I buy it right now? Probably not. Am I looking? I'm always looking. I'm always looking for deals. It doesn't matter where rates are. It doesn't matter the market environment. You have to sort of be on 24/7, 365 hunting for deals to stay in tune with the market. Now, the values of multifamily, specifically commercial and even residential in Miami-Dade County, is extremely elevated. I mean, my property value alone has gone up ridiculously. Now, that's probably going to come down a lot. But yeah, I would totally be open to it, and hopefully, I think in the next 5 to 10 years I will. McKenis is technically, the word is that crude oil goes bear when there's a recession, given it means less productivity, so less demand. Yeah, I agree. Agreed. If you guys are enjoying the live stream so far tonight, feel free to leave a like on the video. Click the subscribe button if you're new. Share the show with your friends. We do these live streams almost every day between New York City and Miami, starting at 8:30. Now, I think this is one of the Toyota EVs, right? The Venza, I think it's called. Or maybe it's a hybrid. Toyota Venza hybrid. They kind of look cool. This is a brand new taxi cab right out here. Hey, Oscar Diaz, good to see you. Mark Davis says, Tom, you must be planning your trip to Toronto soon. I am. I mean, God willing, I'll get there over the summer. Thinking about July. You know, as you know me, I'm not really a big fan of the snow. So I'm going to let Canada thaw out before I make my way up there. I see a comment about refining margins. Oil refining margins are still high. That is true. That is also true. Across the street is a famous restaurant called PJ Clark's. A lot of people like it. I'm actually not that big of a fan of it, to be honest. Let me read some of the chats here. Hey, Teresa Diaz, TD, thank you for joining us. Golden City says, Tom, if OPEC Plus cuts production again, we're back to rallying. But if not, maybe we keep going down 50 to 44. You know, it's interesting. I posted this on Twitter the other day. And right around the time where oil was trading at $130, you had all of these crazy headlines in the Financial Times and Bloomberg, CNBC, and this is like classic market psychology on display here. And Goldman Sachs, and you know, crude oil could hit $240 a barrel. The XYZ Investment Bank, you know, famous analyst that predicted the 2008 financial crisis, thinks crude oil is going to $300 a barrel, right? When you see that type of stuff, you know you could freaking call it a day and pack your bags because the move is totally over, right? A lot of times, you know, it's just going to sound a little bit crazy, but a lot of the times people will start to talk their book, right? So on Wall Street, it's called talking your book. Like, let's say if I own Apple, right? This is just an example, I don't, but let's say if I own Apple, I'm going to, you know, talk about it on CNBC. I'm going to post a bunch of, you know, positive things about it to convince other people to buy, right? And what this creates is it creates an exit liquidity event, right? So it creates liquidity for very, very big players on the street to actually exit their big positions. So I think I wrote about this, by the way, and I said, look, you're going to have a lot of big players start talking their book in the energy sector, specifically around these oil and gas stocks, around the commodity in and of itself. You're going to see these pie in the sky, you know, crazy price predictions, and that is the exit liquidity phenomenon, right? They want to talk their book in order for retail, right, or other unbeknownst traders to provide the liquidity to exit their big positions. Now, if you want to check this yourself, you know, type in this headline in Google, and you'll probably see the articles dating from March of 2022. Type in $240 oil price predictions, and you're going to see lists and lists and lists of, you know, famous analysts that called the financial crisis, famous analysts that called, you know, the 1987 crash predicts, you know, crude is going to 200. It's just ridiculous. And hopefully, everybody, this is something, I'll quickly tell you guys something I'm actually proactively looking for. This is what I'm looking for, and we have not yet seen it. Once they start parading people like Peter Schiff, Michael Burry on mainstream television, okay? Peter Schiff has pretty much been banned from CNBC since the 2008 financial crisis. But once you have somebody like Peter Schiff being invited back to CNBC, that, I mean, you should be in with both fists into this market, right? I'm not telling you guys what to do. I'm just being a little bit facetious and funny with that. But the point is, when you have people talking a book, it's very specific people that are always bearish or people who are always bullish, you should probably take the other side of that trade. This is New York Institute of Technology. This is actually a very, very good school. And you guys could see what I'm talking about, right? The college is in Manhattan. It's not like a campus. It's sort of just like a big skyscraper. So you go in, you go up to your classroom, and it's really about it. It's not really much of a campus. But you can see a little bit of Billionaires Row from here. You can see Central Park Tower and 220 Central Park South. Hey, Melissa 2087 says, Tom, my father-in-law got the Microsoft and Apple stock back in 1998. Some friend told him that hardware is not where it's at. You need to invest in Microsoft or Apple, so he got both. Very cool. Man, 1998. I was born in 1995. I kind of wish I was a little bit older so I could have seen in real life those sort of market options. Let me read some chats here. Oscar Diaz says, Tom, have you been keeping up with Champions League? I haven't. Not as much as I should. And I mean, I really should get back into watching soccer. You know, I really, really should, because I played in college, you know, and I think just once COVID happened, or C-19, I sort of totally checked out of the sports world. And, you know, out of sight, out of mind, I probably should get back into it, but I don't know. I think one of my goals for this year is to actually go to more sporting events. If you think about where I live here in New York City, we have some of the, you know, the most great sporting establishments ever. If you think about Yankee Stadium, you think about MetLife Stadium. I never really go to any of these things, and I live right here, which is kind of crazy. Hey, John Kelly says, well, Tom, BTC is the next train like that, my friend. I know you're on that, like Microsoft and Apple. Oh, so you're saying that's the next train to go down, perhaps? Maybe you're right. Maybe you're right. I disagree, but maybe you're right. Who knows? That's what makes the market, right? NBA Elias says, if you were older, Tom, you would have never forgotten the 80 to 82 recession, 16% mortgage rates, and brutal unemployment. Jeez. Yeah, and I mean, to your point, NBA Elias, somebody like me, right, in my generation, we've really only grown up in easy money environments. And I think that's actually created bad habits, right? Humans are creatures of habit, and I think a lot of younger people have actually had it easy, especially if you're raising money for a startup or something. So I read an article in the Financial Times the other day. Well, not the other day, this was like 3 weeks ago. And the article was talking about how we're going into a time of abnormality. And I was reading the article. It was actually very well written, but I couldn't have disagreed with the article more. I should say the author of the article. And the reason why I disagree is because if you look back throughout history, what is not normal is keeping rates suppressed, right? It's only after the 2008 financial crisis that we had the Federal Reserve printing money like crazy, buying bonds such as mortgage-backed securities and U.S. Treasuries to suppress yields, right, in order to provide liquidity to the financial system. This is the front of Deutsche Bank Tower. This was actually originally called the Time Warner Center. But yeah, it's interesting. I actually think, you know, raising rates is a net positive over the long term, right? Savers will finally once again be rewarded, right? Think about, you know, the stories you have from your parents or maybe your grandparents that were able to go to work, do the right thing, save money in a bank account, and actually earn not a laughable amount of interest, right? You know, be able to do the right thing, save your money in an interest-bearing account that could actually compound and you could retire off of that. I mean, you can't do that, you know, ever since 2008. I mean, you put your money in a bank account. I mean, it's laughable, the amount of interest you get. You know, now that's changing, though. That's changing. I think it's going to get a little bit better. But now, speaking of banks that are failing, this is First Republic Bank. Also, Deutsche Bank is not looking too good either. But We've talked about Credit Suisse, we've talked about Deutsche Bank. Those are two main banks that have always had major problems, right? This isn't something new. Credit Suisse has always had major problems. Obviously, UBS bought the failing bank. And I think combined now they have what, over $2 trillion in assets under management, or AUM? Hey, Ed Dunkel is here. What's up, Ed? Good to see you. You know, since we're at Columbus Circle, I'll show you guys where I used to live. I haven't showed you guys this in a minute. Man, this area has changed so much. You see where that bagel place is? It's this Broad Bagels, this building, this older building. Well, it didn't used to be a bagel place. It actually used to be a Subway sandwich. And the building used to be really, really run down and nasty. This building right here. Now, my brother, after college, a lot of his old roommates, his old friends, actually used to live in a 4-bedroom apartment right in this building. And they had a walk-in closet that was filled with just all junk. It was literally a walk-in closet. And I went to school right here, right up the street. You could actually see John Jay College from here. So I said, look, I'm commuting from Long Island. It's taking me 2 hours a day to commute. Could I just live in your closet? And they're like, that's really weird, but sure. So yeah, I lived in a walk-in closet for like 4 years. Literally, it was just ridiculous. And I just rolled out a little yoga mat and went to sleep. And it was probably the most exciting and fun times of my entire life, right in this building. You actually used to be able to crawl on the roof here. There was some pretty cool views. A lot of fun. We actually used to put a barbecue grill up there, charcoal grill up some food. But anyway, just thought I'd point that out, not to bore you guys. Yeah, Ed Dunkel says, it's nice that you're now out of the closet. It is. You know, speaking of out of the closet, I was watching, what's that guy's name, that comedian's name, Norm? Is it Norm Macdonald? I'm probably butchering his name, but he used to be on Saturday Night Live way back in the day. I know his first name is Norm, but I was watching some highlight clips on the train, and that guy is freaking so hilarious. I was in tears. You guys got to look up this joke. Hold on, let me cross the street while I got the light. Norm, yeah, Roy. Okay, Norm Macdonald. I thought I was saying his last name wrong. But you guys got to look this up, okay? You guys are on YouTube anyway. Open up another window and look up the joke. It's called, I think it's called Deeply Closeted Gay Man Joke. It is so hilarious. He did it on Conan O'Brien. I was just in tears. It's and I think he passed away, unfortunately. But yeah, he was just a real treasure to the world. I think he used to be on Saturday Night Live. Just totally hilarious. But look that joke up. It's hilarious. It's awesome. Yeah, Richard Vogel. You're right. He did pass away, unfortunately. But yeah, I was watching some of his old stuff. Really funny. I was also watching a lot of Eddie Murphy's old stand-up stuff too. He's really a real genius, comedic genius. Now look at the reflection of 220 Central Park South on the top of the clouds there. Really cool. Points Travelers, Tom, I bet you had some ragers on top of that roof back in the day. Not really. I was never really a party type person. I just went to school, went to work, you know, that's it. I was really never there. I was only there to sleep. But yeah, Ed Dunkel says comedians are smart for sure. Brad's brains is Norm Macdonald is the genius. He told this joke ever on Letterman. Let me take a screenshot of that, Brad, because I'm gonna look that up on the train tonight. No, Zozo Bob is like, Tom, you still haven't watched Trading Places with Eddie Murphy. I haven't. I have not, but I'm gonna make a point to do that. I got to do that. You guys have been hammering me about that for days. I have to watch that. Now, I'm trying to think of other funny... has been recommending me very old comedy videos for some reason. And so I've been down this rabbit hole, watching old stand-up from like Eddie Murphy, Norm, and others. I'm trying to think of this other one that had me rolling the other day. Oh man, I forget what it was. The moment I stop streaming, I'm gonna remember it. That's usually how it works, unfortunately. Yeah, anybody else have some recommendations on some really hilarious comedians to check out? Maybe some that I wouldn't have noticed. Hey, Prince Isis here, welcome. Restless says you haven't watched Trading Places. How old are you? I was born in 95. I'm not the youngest guy, right? But born in 95. I'm not a big movies person. Guys, you know this, I've never really watched that many movies. I never have time to, but, Trading Places, I guess, is about the stock market, right? What is it? Eddie Murphy is a floor trader on the New York Stock Exchange. So I'll probably get around to watching it. I probably will. Lorraine says, George Carlin, hysterical. Let me take a screenshot of that. Yeah, any recommendations, please. I love all that stuff. If I'm gonna watch something on YouTube that's not like educational, finance based, I think it's gonna be comedy stuff because it's feel good stuff, man. It's awesome. Now, if you guys really want to throw back from the past, there's some really cool archived Johnny Carson stuff and like the Rat Pack. So you have, Sammy Davis Jr., Dean Martin, Frank Sinatra. Those guys were really, really funny, right? Those guys were really, really funny. And that was back before the time where you had to like tiptoe around and watch every little thing. Now it's like you don't know if you say a joke, you don't know if you're going to offend somebody and they're going to flip out and cancel you. But back in those days, I feel like everybody was, okay with, being the butt end of a joke and hanging out. Now it's like, I don't know what you can and can't say. It's kind of refreshing to go back and listen to those old, Sammy Davis Jr., Frank Sinatra, Dean Martin. Those were classics. Those are really, really awesome, awesome stuff. Hey, Jimmy Boyles, good to see you. Wow, look at this art gallery here. This is the art gallery at 157. Really beautiful here. And then this is the Russian tea room from across the street. Usually you guys don't get to see this from across the street. Hey, Arsenal Fan 13, thank you so much for your very kind $5 donation. Says, hey Tom, check out Tim Dillon. He's pretty hilarious. Yeah, Tim Dillon I think is from Island Park. Not too far away from me. You're right, he is a Long Island guy. I think he's from Island Park, right? He's from one of those. I think Island Park, Oceanside, or Long Beach. One of those. But yeah, he's funny, man. He's really funny. You know who else is really funny that has a very similar comedy style to Tim Dillon? Man, I'm horrible with names. Andrew Schulz. Okay, what does everybody think about Andrew Schulz? That guy is hilarious. You know, I think he has a podcast with, and I know the stream is going totally off the rails, but it's fun every once in a while to go off the rails and talk about something else. But yeah, Andrew Schulz, he's funny. You know, I'm not sure if he has any live shows in New York, but I'd love to see that for sure. Jimmy Boyles is Rodney Dangerfield. I'll have to look that one up. Ryan Beck's Schultz is great. Yeah, he's freaking hilarious, man. Mark Davis says, have to watch Man on the Moon. Let me take a screenshot of that. Any of your suggestions, I'm going to take a screenshot of, I promise. Ryan Beck says, you need to watch his podcast on YouTube when he has Rogan on. You know, I watch it sometimes. Now, there's another guy that I really like that sometimes is on the podcast, the guy with the red hair. He's funny too. I mean, all of them are. There's another guy that's like more of a southern guy. I think he grew up in the deep south. He's Puerto Rican, I think. Theo Vaughn, I think. I think those are probably the top two comedians of our time right now. Wow, this guy is freaking hauling. Oh my God, look at that. I think that's the fastest I've ever seen a horse go in New York. They got somewhere to be. No, not Conan O'Brien. No, he's newer to comedy. He's newer known. Yeah, I know, Roy. No, it's not Carrot Top. The name will come to me sooner or later. All right, guys, here's 432 Park Avenue, but the black building, that's Trump Tower. Doesn't look like anybody's home there. Hey, Edson says, hey, Tom, whenever you have some time, please watch Billions. I'd love to hear your take on the show. You know, I've seen clips of it. I know what it is. It's supposed to be about like investment bankers. But I don't think I have HBO. I don't have any way to watch it. But I've seen clips. I will try to check it out for sure. Now, Billions is the show. The main guy is he's in that movie Band of Brothers. Does anybody know what I'm talking about? I don't know the actor's name. He's a very famous actor, one of the most famous actors out there. Man, it's really windy again tonight. But I think he had a lead role in Band of Brothers, that series, and now he acts as the managing director. I'm trying to think of his name. Oh, it's on Showtime. Yeah, I don't have any of that. Hey, Kevin is here. Says, Tom, when do you think the economy is going to be in a better place? You know, I don't know. I really don't know, but I will say this, and I think this is important to say. You know, regardless of economic condition, you know, you are in control of your own outcomes, right? And I think people need to realize that. So regardless if, you know, the economy is doing well, if companies are hiring or companies are laying off, you need to take the initiative that you're in control of your own outcomes. So it doesn't matter if, you know, the economy is in the tank, if the market is down, you know, 20% year to date, you always have to be stepping on the gas, right? You always have to be progressing. And you got to be very critical of yourself not to use an economic environment for an excuse, why you're not, performing well at work, why you're not doing this or that. You really got to be steadfast here and really drive through. Because the people who do, right, this is the Louis Vuitton building, a lot of construction going on tonight. Look at that. Because the people who do stick it out when times are bad, those people are usually rewarded the most when times get good again. So for people in real estate right now, for people who work in tech or really anywhere, right, I think now is the time to double, if not triple down on your efforts. Always stay engaged, right? Always go above and beyond for clients, right? You should be putting more aggression towards your service, right? Towards servicing clients and customers now than ever before. Because they may not be buyers right now, but when times get good again, they're going to remember the people who ghosted them and who were only interested in having a relationship when they were ready to buy something, right? So I think that's very critical. It's called playing the long-term game. People pick up on that very, very quickly. Is your sales guy or your sales girl, are they only around when you're ready to buy? Or are they around forever, willing to help and acting as your trusted advisor? So that's what I would do. I would go above and beyond servicing customers right now. Even if that means you're not going to get an immediate payoff, you got to do it. Wow, look at this shot, everybody. This is a pretty good shot. 432 Park Avenue in the clouds here. Hey, Gary Carpenter. Good to see you, Gary. We are now headed to the east side of Manhattan after being on the Upper West Side. Triple G is here. What's up, Triple G? Welcome. Al Baker. Hey, Manny Explorers. What's up? Happy Wednesday. I bet you're happy that finally it's spring. Tomorrow, a lot of people in the chat were saying it's going to be 70 degrees. Thank God. I'm definitely over winter, man. I can't wait till we can walk around Central Park. It's going to be 70 degrees. Look at this big rig here. But Manny, thank you for joining, dude. Always good to see you. Mars Tech says, Tom, do you have a car? I don't. The only motorized vehicle I have is a scooter, but that's down in Miami. But yeah, I think just a car is too cumbersome to have in the city. Unless like you're really, really rich. This is the Four Seasons, by the way. Four Seasons Hotel. It's just a pain. Do you want to sit in this traffic? Look at this. It's almost 11 o'clock at night and there's gridlock traffic still. Like, I don't want to deal with it. I don't want to deal with having to park the car. What if I get a ticket? What if someone scratches the car? What if a guy on a scooter rams into it? I don't want to deal with that. So I'd rather take the train. I'd rather walk. But, I have that luxury. I don't have any kids or anything like that. But, assuming one day I have kids, I probably need to get a car. But I think as of now, I don't want anything to do with it. All right, now we're crossing over Park Avenue. You can see the MetLife building in the distance. But if anybody's interested in moving to Miami, Florida, okay, if you're south of Fort Lauderdale, if you get yourself a little scooter, right, like a motorized scooter. So the one I have, real quick, I want to point this out to you guys. remind me, okay? And I'm really counting on you guys to remind me of this. In 2 to 3 weeks, remind me to come back to this spot, Park Avenue, 57th Street, because this is going to look gorgeous, okay? They always do this every year. They plant hundreds of tulips, and they're not yet bloomed, obviously, but maybe after a couple 65, 70-degree days, this is going to be beautiful colors of orange, of yellow, purple, pink. It's going to look fantastic. And they have it all up and down Park Avenue. So remind me to come back if I don't remember myself. But yeah, if you're looking to move to Miami, get yourself a scooter, and your world is going to be fantastic. You could cruise to the beach, cruise to downtown Miami, go to the office. Hey, Colleen, welcome. Good to see you, Colleen. Hey, Jack Spencer says, when I was in sales, I spent one afternoon a week just contacting clients, asking if I could help them further. That's fantastic, Jack. That's called presence, and that's called follow-up. That is so critical. That is very, very critical. I think that's the biggest mistake a lot of people make if you're in sales. It's not thinking long term. And I sound like a broken record when I say this, especially a lot of new people like enter sales, right? They're so petrified and so worried that, oh my God, I gotta make money this month. Don't worry about it, okay? Focus on building your business, because here's the thing. If you have a huge funnel, right? If you have a huge pipeline of people, you don't have to push somebody into a sale that they're not ready to close yet. Does that make sense? So I think one of the reasons why, I've done very well in sales is because I never had to force somebody into a deal that they obviously weren't ready, right? So that's why if you have a salesperson on a team that's consistently not hitting quota, that's very dangerous for brand recognition. Because when you're not hitting quota, and I've seen this time and time again, okay? I have a lot of experience here. The salespeople get desperate. And when you get desperate and you're under pressure, you do unethical things, right? You lie to customers to get a deal done, you do something stupid, and that could really be detrimental to a brand. So just focus on growing a pipeline so big that you have enough opportunities in there. So after about 6 months to a year, you have so many contacts that just by law of probability, you're going to have people that are going to be ready to buy when it's appropriate for them, right? And to Jack's point, it's all about funnel management. Are you following up? Now, following up doesn't mean being pushy, but just checking in with the customer, checking in with the client, because out of sight, out of mind is real, okay? Out of sight, out of mind is real. If you're there once a week, every day, right? It's going to establish presence, right? Like we do this live stream, right? We do the live stream almost every day. That's presence. People are here, people know what time to join the chat, so it's presence, right? It's the same thing in sales. If you're present, if people know that you're willing and able to help them out, you don't have to get into those sticky situations where you do unethical things to force a sale because you have such a huge funnel that it's literally exploding on you. So that's a good point by Jack. Very good point. Follow-up is very important. Hey, CeeLo is here. Speaking of our pals from Canada, hopefully you guys are thawing out there. Now this building is actually built right behind my favorite building in Manhattan, the Seagram building. Maybe we'll have enough time today to just go down there. Hey, NBA Elias is thinking that change is too costly is a big mistake in sales and business. Agreed. Guys, look at all the garbage bags that are like oozing. Oh man, that's gross. The smell is so pungent. Man, that is... Now, I thought the city was supposed to do something like build, what is it called? Oh, guys, now that I'm here, I meant to take you guys here for the last month, and I never was able to do it. I got a really good recommendation for you guys for food. So if you come to, let me make sure I got this right. Yeah, East 55th Street, okay? So on the corner of East 55th and Lexington Avenue. If you walk, I would say about halfway down the block. I'm trying to see if I could read the name. I'm blanking on the name, but it's right here. Here it is. Little Steam Bun Ramen. This place is really, really good. If you guys like Chinese food and you're in Midtown, this place is a 10 out of 10. Highly recommend it. Since we're here, I'll show you guys the menu. But this place is phenomenal. Okay, the exact address is 146 East 55th Street. Little Steam Bun Ramen. This place is really good. It's a bit pricey, obviously, because it's in Midtown, but this place is probably the best Chinese place in the area, in my view. Anybody ever been here? You know, I think Dan Sang was talking about this, and I couldn't remember the name, but if you're visiting New York, or if you work in the neighborhood, this place is a total 10 out of 10. This place is really, really good. I come here a lot. Not as much as I'd like to anymore, because I no longer work in the area, but look at that shot. Is that not a 10 out of 10? Look at that. Now, what you're looking at right now is not only 432 Park Avenue, but you're also looking at 425 Park Avenue, which is that brand new commercial space that Citadel occupies. Really cool with the clouds there. But yeah, once again, this place, big recommendation from me. If you like different types of, okay, I'll recommend the dish I get. I'll just tell you guys what I get when I go there. You've got to get this dish. It's called malatang. Now, it's very spicy, so I'm not sure for those of you who aren't big fans of spicy dishes, maybe don't get it. But if you're willing to try and you're open to it, order that, and I guarantee you're not going to regret it. It's called malatang. It's like a hot pot dish, but it's very spicy, very spicy. Hey, Tiffany Page, what's up? And then I also get the beef. What do I get? Yes. I get the beef and crab soup dumplings. Those are fantastic as well. Oh my God, guys, we're looking at 10 out of 10 views all day today. My God, look at that. That's the Chrysler Building. One of the best Art Deco buildings in the city, probably behind the Empire State Building. But I think you guys would agree. That's a great shot. Once again, looking down Lexington Avenue, looking downtown. Awesome shot of the Chrysler right here. Yes, somebody said, can we look at JP Morgan Chase's new office tower? I think we were there yesterday. Maybe we'll have some time to go there tonight. Let me check my battery. Yeah, we'll have some time. We'll take a look. For those of you who are just joining, we did mainly have a conversation about the FOMC meeting. Once again, if you want the direct press release from the Federal Reserve, if you type !FOMC in the chat, the Nightbot will drop the link to the press release that outlines exactly the statement of the new monetary policy. So obviously everybody knows by now the Federal Reserve decided to hike interest rates by 25 basis points, bringing the Fed funds rate to a target range of 4.75 to 5%. Here's another beautiful looking building here. I think this is SUNY for the State University of New York. Let's see. Yes, correct. So this is the SUNY Global Center, State University of New York, not to be confused with CUNY. Wow, this one looks like it was just totally resurfaced and remodeled. Look at this. Wow. You could tell they resurfaced the entire building. Everything is brand new, but they were able to preserve the original architecture. Wow. Now, I think this is a very famous art dealer, actually. I'm actually kind of curious if I remember correctly. I believe this is an art dealer. Let me see. Boutique Antiques. Oh, maybe it's for rent. They're trying to rent it out? I could have sworn this was an art dealer back in the day. Could be wrong. 115 East 55th Street. Man, look at that. Look at the detail. Wow, that's incredible. Beautiful awning over the top. Now this looks like it's going to be something. I'm not sure exactly what it's going to be, but whenever you have a big vacant lot, especially in such an iconic place like Park Avenue, you could probably best believe this is going to be some sort of a mega tall, either luxury residential apartments, or it's probably going to be Class A commercial real estate. But this is the newest addition to Park Avenue right here, 425 Park. Look at all of that vacant retail space. This is where Citadel Securities is. Hey, Sunshine NYC, what's up? Good to see you, Sunshine. Always a pleasure to have you here in the chat. Michael Joseph, good to see you. Wow, Chris from Florida says, Tom, my father worked at 230 Park Avenue for over 30 years. Very nice. Yeah, Park Avenue is beautiful. Now across the street is 430 Park, I believe. I worked out of here. There is a WeWork office on the 18th floor. There was actually a big robbery here. I think just before Christmas. There was a very fancy, I think, jewelry place that they did a little bit of a smash and grab action here. We'll see it. We'll see if they. It's obviously all patched up now, but I don't think we're going to have time to go to the new JP Morgan Chase office tower tonight because we're just cutting low on time. So yeah, 430 Park. I work out of here sometimes. There's a WeWork office located on the 18th floor. But this is that jewelry store I was talking about that unfortunately was that big smash and grab. If you guys want to look that up, they pulled up in a big minivan here. They all rushed out. They smashed down the doors and they just took everything. But to me, I don't understand it because I always thought, and maybe somebody here, worked in the jewelry business. I have not. I always thought that they put away that stuff at the end of the night. Why would they leave anything on display? Don't you have a big safe in the back where you put all the items on display away? I don't understand why you would leave that up. But anyway. Hey, John Abraham, good to see you. Real quick, this is 432 Park. Hey, Dan Zhang, what's up? This is Tom. One of the best soup dumpling restaurants in New York City is called Shanghai U Garden in Bayside. Oh, really? Hold on, let me take a screenshot of that. Hold on. Now, unfortunately, I really never get out to Bayside, but I may have to make a special trip just for that. Thank you for that recommendation. Dan, maybe you already put it in the chat, but have you been to that one that we just walked past? It's on 55th and Lexington. It's, I already forget the name. Little Steam Bun Ramen. Very good. 55th and Lex. You guys can see the Dow Jones Industrial Average. There's a little bit of a glitch there, but down almost 600 points on the day. The S&P 500 down about 65 points, and the NASDAQ down about 190. Now, obviously, there was huge intraday volatility in the equity market today due to the FOMC meeting and interest rate hikes. But I think the bigger story was actually in the bond market. The bond markets have just been totally erratic and totally unstable. Bond yields surprisingly were actually lower most of the day. I think we're trying to recover after hours. Now, if anybody could look at futures, not futures. I'm interested to see where China opened up, because China opens up at 8 our time at night. Anybody know where the Hang Seng Index is trading now? Because usually China will lead us either lower or higher into the open at 9:30. Yeah, Polo Pony says you were getting some amazing shots of the beautiful skyline tonight. Yeah, it's been a really fun stream. Sometimes it's nice to talk about something other than finance. I think we had a pretty good comedy conversation too. OX07 says Ramadan Kareem. Is it really Ramadan? I could have sworn that's what, tomorrow? So it's the start of Ramadan, is that right? I'm not a Muslim, but I saw it on my calendar. So that means there's fasting from sunup to sundown, correct? And that means no eating or drinking. Water, you can't even drink water, I think. And then once the sun sets, then I think you could eat. And I think that's why, if you've ever been to any of the really, really good halal places in Manhattan, there's so many. My favorite personally, you guys know this, I don't even need to say it. My favorite halal food place in Manhattan is literally right across the street from Radio City Music Hall. Look at that. You could just see the Empire State Building spire. It appears to be blue tonight. But it's called Adele's Famous. And that's probably the reason why there's always a huge line during the wee hours in the morning, because I think you're allowed to eat once the sun goes down. NBA Elias' Hang Seng is up 158. Yeah, we'll see. We'll see what happens tomorrow. Hey, Photos, what's up? 45, this is Tom. I think it's also Persian New Year. I don't even know what that is. I'm gonna have to look that up. But guys, if you've enjoyed the live stream tonight and you want to join us tomorrow, we do start at 8:30. I do have a couple other things that I wanted to go over. We got a little bit sidetracked, but that's all right. Who cares? It's first week of spring. If you enjoyed it, leave a like on the video. Click the subscribe button if you're new. Share the show with your friends. I'll see you guys tomorrow, back live at 8:30 here in New York with all the construction of the city. Until then, I think we had a good conversation about the Federal Reserve. Interest rates are going a lot higher for longer. That is the name of the game. We'll talk more about crude oil, we'll talk more about gold and the housing market at a later date and a later time. So Richard Vogel, thank you so much for being here. Mike C, Jimmy Boyles, Sunshine After Rain, Muhammad, Patrick New York. Appreciate you coming out. Jay Line Sync 45. Thanks for being here. Ryan Beck, NBA Elias, as always. Appreciate your insights and the help. Joe Driver, Mark Davis. Thank you for joining us on the Dakota Apartment Day. Fred X, God bless you as always. CeeLo, Sabrina Fair, John Abraham, and to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere. You just need to know where to look. Guys, halfway through the week already. Let's finish strong, okay? I want you guys to have a great Thursday. And regardless of the market conditions, regardless of who's in the White House, regardless of who's the Fed president, you guys control your own destiny, okay? So be steadfast, be disciplined, and never take your eye off the prize. Take care.